Agam, my sense is that Torrent Power would see significant kind of earnings and revenue traction now for the coming 12 to 15 months, because this order execution time is not very long. They have to complete this order in the next 18 months, and I think this is a large order. So I think my sense is that they could definitely make decent EBITDA margins in this product category. And I think once the execution starts quarter on quarter, you could see the impact of that coming in FY25. So I think what you're seeing today is that despite a sluggish and a volatile market, when the broader indices are down, Torrent Power is up largely because of this news flow. And I think the markets are factoring in a strong earnings growth for the next year, that is FY25. So I would not be surprised that we could be seeing levels of even 1300 or 1350 here, because I think earnings growth trajectory both from the existing business and from the new order book will actually start trickling down in FY25. So I think net, my sense is, of course, at these levels, the stock has risen fast, but any correction could be used as an opportunity to include it in one's portfolio. I think, Agam, my sense is that cut in LPG prices is something the markets are little worried about. More importantly, I think market would be looking at concrete data points, how the next couple of quarters are going to pan out, because any kind of pricing cuts would obviously immediately lead to some sort of little bit of margin erosion. Of course, they would be making up via volumes. But my sense is that of late, most of the natural gas players like Mahanagar Gas, Gujarat Gas, Indraprastha Gas also saw a lot of pressure, because there were some reports stating that price cuts could come in and the government is not going to interfere here. So my sense is GAIL definitely has the benefit of a well laid down infrastructure. Obviously, it's one of the largest pipeline gas companies. So I think to a larger extent, one could get some concrete evidence of this only post the September numbers. So I think till that time, it could at best be a market performer, but I don't think you're going to see a very large price correction. So I think investors who have the stock should hold on. Fresh buying should be done by only those investors who got a slightly longer term view. I don't think in the short term the stock can get re-rated, but yes, post September there won't be much more clarity on the numbers, and that would be a time where possibly you could see a better growth trajectory for the company once more data points are available. So I think one reason could be that Agam, but I think clearly the markets are quite excited considering the kind of growth in the airline traffic and the cooling off of the crude prices. Because I think in the current year, my sense is that not only the third quarter was good, but I think the coming financial year will be quite significant for Indigo, considering the fact that some fleet expansion could happen, and I think rates have stabilized. So I think more importantly, the airline traffic is now going to be a key trigger point. I would not be surprised that this stock now almost controls 50% of the market. So a great degree of pricing power has already got built in the company. So typically, I think this is one stock where I think I would suggest one could look at buying the stock on a slightly correction mode. Although at least for the next 12 to 15 months, the outlook remains positive. So I think this stake sale is not going to be significantly going to impact the stock. In fact, after the sale, the stock has moved up, as you rightly mentioned. So I think longer term data points are going to get better and better as yields get better. And hopefully crude remains at these levels. I think, Agam, you could see better profitability from Indigo. So we are positive on the stock, but yes, I think you would buy at slightly lower levels to get a better risk reward, in the portfolio.